Hi everyone, good morning from my side. It's Sunday. Time is 8:48 a.m. I want to first of all wish each and everyone listening to me a happy new year. Indeed, we are grateful for a very new year. And once again, we are back on the chat. For some of you, it's been so many months. And yes, I took a break from doing videos. And now I am back. So yesterday with a couple of my friends, we tried to do this, but along the line, I had a terrible power outage. So we had to end the meeting. But I promised that I was going to do the explanation, the video, and send it to them. So here we are. So basically what I'm going to do, or what was happening, was I was explaining my trade in the first week of January. Actually, my trading started. I started trading for this year in the first week of January, between 4th and then the 6th. Of course, the 6th was NFP day. A minute. Okay, so the 6th was NFP day. This was Tuesday, Wednesday, Thursday. This is NFP. So basically, what I'm going to do is break down the trade I took, and then I took two trades. One was a win, one was a loss. The first trade was in two positions, and then the last trade was Friday, end of the day. Took a loss. I wasn't supposed to trade, I know, but I will explain my thought process as to what I saw and why I decided to take a trade. So it's a good thing for me because I have everything written down here on the account of that event, right? So this is the dollar index you are looking at. I will switch to the daily, and then I will break down my thought process, what I was actually looking at that made me to the trades that I took in the course of the week before the Friday NFP, right? So I'll switch to the daily. Pardon the demarcations I've done here on the 15 minutes to make sense, but then maybe it might be too cumbersome on the daily, but I'll try as much as possible to highlight and make it bigger so it doesn't confuse anybody. All right, so here we go. This is the dollar index daily, and what I was actually basically looking at was I was using structure, and everybody would agree with me that in the last days of December, I don't know if anybody traded, but I was enjoying my free time. So between these days, I never took a trade. I think from the 20th until the 3rd of January, there was nothing like me looking at the chart or trading, right? But this day is 30th December 2022. You could see this here. I've marked this here. I'll switch to the weekly, and then I'll tell you where I got that from. So this is it. And then this is the last week of December, I believe. And I had this one marked here as the draw. Right, this is coming from this low and then this high. Okay, so I was looking at this fair value gap on the weekly time frame. So that's what I have here on the daily. So on the 30th of December, we had the price dipping in there. And then this is 1st of December. Of course, no, sorry, this is the 1st of January. Of course, there was a no trading day for me, honestly speaking. But since we had dipped into this, I was expecting some sort of a reaction. So I was waiting to see exactly what's going to happen here before if any action was going to take it. I'll be very honest with everyone here. I was only expecting to see huge moves before I would be convinced that we are ready to begin trading. If the first week of January were to be like this, these candles here, there was no way I would have gone in there to waste my time. Very honest with all of you guys. So now, once we dipped in here, my attention was drawn to this point here, to this high. Right? So this was now where I was expecting price to pull back to, because you would agree with me that dollar had been in a downward momentum, like it's been trading downwards. If it's hard for you to see, then you just get something and then try to, from this low, this one never broke that. This one never did, but this high here actually came down to take out this low, causing the market structure shift. We had this as a pullback, but didn't close this gap here, the gap that I've actually outlined. And then we had the breaking structure again, closing below this. And then from there, we had the consolidation. This one actually came down, but since we were trading in the gap, I wouldn't consider it, but I'd rather wait for what was going to happen. So this area here was where my attention was drawn to. I was actually expecting that they use this as a liquidity area, sweep it before it would continue to the downside. So I marked out this fair value gap on the daily time frame. And then I was expecting that once we hit this, we begin to see some sort of a pullback, and if possible, come to this area here, right? So that's like my general overview, what I was expecting. So I marked this out, and then even though this is a breaking structure, I completely ignored it. I'm not going to lie to anybody here. I completely ignored it. I could have used this and then that as the range, then expect a pullback, a deeper pullback to go short, but that's not what I did. I was actually expecting price to come fill this gap before continuation, because it's the general narrative was the dollar was still down and perhaps was looking for more liquidity to the downside, right? So price dipped in here 30th of December, and right here on the 1st we had this extrapolated move closing above this candle here. So this is what gave me the green light that price actually wants to pull back as I am expecting, right? So I'll switch to the 15 minutes from here. I can do the 1 hour time frame, but I'll actually go straight to the 15 minutes because I want to keep this video short. But then on the H1, you could see that this is where it dipped 30th. Then on the 1st, this is the move, right? Closing below this high and then this high as well. I've actually put this here to remind me that there's a shift in market structure. This gray box here is between the 50 and the 61.8. If I pull the fib, let me show you here, right? Why did I leave this here? It's because I was expecting to see price pull back in here and then follow up with whatever price action I was going to get to before I continue taking action as to selling whatever currency I choose to trade, right? So this is Texas 1.8, this is a 50. So I was this high, this old high here, and then this is 1.8. That's where I actually was looking at. That's why I have this green box here. This green box where you see I've written the H1 fair value that I'm taking back. Right, this here where you see I've written the H1 fair value that I got from between this high, right, and then this low, right. So I'll show you another example on I think Euro USD and then probably GBP USD, right? How I come about with such gaps, because I believe that. Let me switch to the 15 minutes time frame, right? So this high all the way down, all the way up, and then this candle opens. It didn't come back to touch this old high, so I deemed this gap, right? And if you can see clearly, that is exactly what price tend to show. Now I have this green box, the bigger portion, actually marked, and then I had this here, green, right? So I'm looking at what price would do when we get here. If I don't get the pattern which I'm looking for, then I'll wait, right? So this now becomes the liquidity. Why? Because it's a failure swing. That's right. This level here comes the liquidity. Why? Because it was a failure swing. So this is the low, this is the high, my new range, new trading range, because this is where we did, and this is where price actually expanded, right? So it tried to come back in, it hits the 50% of the trading range, and then rejected, but never took out this high, right? So as soon as it began coming down, you know that this is a target because this is a failure swing, right? All failure swings gets taken. And this is what gives me a conviction that price would actually come to the 61.8 or possibly the gap I have actually marked here. So price hit, and then I still haven't gotten my whatever I'm looking for. But over here, use right. So price hits here, nothing is happening. But from here, this low to this high, that is where I have the shift on a 15 minutes time frame. This is the dollar index, but I just want to make everything clear. And then also, this was Wednesday, right? This was a Wednesday. So you see something very interesting when I switch to Euro USD and finally the cable where I took the trade. This is Wednesday. I have price dipping into the gap, consolidating, and finally looking at structure to the upside here, comes back into this overblock. Then we have another huge move. This is also another breaking structure, comes back again because price is leading to the end of the day to take action. And this day gaps down, still doesn't go below this, which makes this move a valid one. And then here, when you have it, that's where you have the trade. This was on Wednesday. And so I'll go to USD. I didn't take any trade on that, but I'll still explain, and then I'll go to GBP USD where I took my trade. So I'll switch to H1 for this is 15 minutes for USD. So this is the move, of course, when dollar was expanding upwards, this is coming down, right? You see that I have this green box and then annotated price action here, meaning I was actually expecting price to come here, and I was waiting to see what price would do when it gets here. So this is a reminder for me personally that when price gets here, expect a bearish price action because this is an indication that we want to go down. Now, price had a different agenda, and I'll show you It's coming from H4 low. If you look at this low, see I've actually extended it. Now you don't see anything here, but I've actually written H1. Let me switch to H1 so I got the gap. The same thing I was actually explaining to you. So between this whole low, price coming down, and then the opening of this candle not failing to hit this whole low, that is where I got the gap from. All right, so I have this one here, and then also this one. Now I have the two of them because if price fails here, because I know that we would certainly have some sort of a pullback before the continuation to the downside, and this would be my ultimate target because it would be the beginning of the pullback, and then when price is coming down, this is a failure zone, so this one gets taken. Right, so if this H1 gap fails, I'm expecting a deeper pullback here and watch price action on the lowest time frame. It's 15 minutes, 5 minutes for a short. Simply put, like simple as that. But I didn't take the trade on here. Now watch what happens. This is Tuesday. The pullback happens on Wednesday. All right, so switch to 15 minutes and then I'll take you there again. So over here, if I go to my trading view, you see that I outlined how to trade because I was expecting, it's not a trade that I personally took on my MT4 on my live account. I outlined it on trading view. Let's see where this is. I can show that's really good. 15 minutes. But I have something here, but I'll try to explain. That's it. I didn't actually take the stream with. I had this marked here because I was expecting the pullback to come in, right? And then this was the target. This little whatever here was the target. And you can see it was hit on the Wednesday. Right, so I'll take you back to the chart. So let me break down that before I continue. So we had an intraday market sweep, breaking structure here, and price coming down in here, right? That would have been the trade because I have already established that. I mean, once we have this extended, this little move here from this low to this high, breaking this structure is an indicative that I'm going to perhaps see some sort of a pullback, right? So price comes back, and of course, this is where you'd expect to see a bullish price action before take the trade. So switch to 5 minutes. It's very clear here, right? Very, very clear. So here you have the breaking market structure from here. Right, you have this, you have this, you have this, and then you have the breaking structure from here. Right, price comes here, you didn't get it. Of course, this would have been the first trade. You have this extended move, breaking structure here, leaving these liquidity points. Why would you trade from here? Why wouldn't you trade from here? Because this low, this high is now the new trading range, and this level is way too high if you put it in the perspective of premium and discount. So you trade this, rather use that as a liquidity, right? So price extends and then comes back in, filling this gap, right? So that would be your entry for this as a target, perhaps that, or this H1 gap, right? So that's it. That was like by the good trade, and I hope it's clear. If it's not clear, go back to the trade. I'll put it on YouTube so you can actually rewatch it until you get the understanding. So I'll switch back to the page. M15. So price comes in here, and my mine is we would still see a deeper pullback here. So I didn't mind. And plus, once price got here, this didn't give me a very clear price action. As you can see, we only consolidated and there was nothing that was really exciting to me. That's why I didn't take a trade on this one, but rather the GBP USD. Right. So these are the trades and positions I took on GBP USD as opposed to the Euro USD. So this is the extrapolated move, this is the extended move downwards, indicating that price is set to perhaps go down. Now watch what happens on Wednesday when we're pulling back. Whilst Euro USD was hanging in this area, dollar index was hanging in this area, GBP USD went all the way to take out this previous day's high, right? I have this here because I was expecting to see price fail after taking this liquidity. But if you watch closely, there was nothing that could have given me an indication that price is going to stop and reverse here, but rather target this. Why? Because this is the high that began the pullback, but then actually failed. Now, if you put it into perspective, this one would have given you this high here, would have given you a perfect entry on that same day. But since we failed to continue lower to take out this now becomes the target, right? So how would you have taken this? This is an intraday stop hunt. This is a breaking market structure from here down. And this is, if you pull the fib, this is the perfect point to take a trade. This one would have given you a very, very decent trade. I'm sure this is up to about 50 or 7 pips. This is GBP USD. So this one would have given you a very decent trade. Could have taken this and then taken your trade into partials, closing them in partials, and you still have something. And once price stops here, consolidates, comes back above this, you know that price has actually decided not to do. So it takes out this here, takes out this, and then rejects, consolidates, expands, and then close above this. Then you know that something is about happening. Have this here. That's all. So Wednesday, when we're having the pullback, GBP USD decided to go all the way to take out this previous day's high. And that is where you have your SMT divergence, right? That is where you have your SMT divergence. So now what is happening is that Euro USD is pulling back and is actually consolidating after hitting this H1 gap. The dollar index is actually pulling back on Wednesday when it hits this H1 fair value gap, consolidation and breaking structure to the upside here, right? Breaking structure to the upside here. It's this one. So let's into the sketch because I had a question this week from one of my very good friends that how do you trust SMT divergence? Now, what I'm doing here is before the fact, but it was actually asking real-time question. Now you are in the charts, everything is moving. You see that this is failing to go lower, but then GBP USD is actually taking this high. Okay, yes, you have your SMT divergence, but how do you trust that this is an SMT divergence that would hold so I should trade it? That's the real question. That's what I'm going to teach you here. So if you look at what is happening here, this hits, it's consolidating. It hasn't given you anything like a breaking market structure. Of course, you could say that a broke structure here came in here, right? You could have taken a trade here, yes, but this one failed to break this low. If this swing high that started the move fails to break this low, it means that this is now a target, meaning this trade would have failed. And that's what you have to do, right? Price comes back to take it out. You still don't have any clear break in market structure. Of course, this is a 15 minutes. I don't know what the 5 minutes would have been, but I rarely trade on 5 minutes unless I'm actually looking for the lower time frame confirmation to take the trade. Right, so this would have taken, still not giving, but I prefer a breaking market structure on the 15 minutes so that I go down to the low time for entries. Right, so this one, clicking this out where you think that you have a trade, swept, no clear sign of a breaking market structure. This is only a sweep, comes back in, no sign of any structure, right? Until we have this move that comes all the way here. Unless perhaps you had decided to just do this, go to the high to the low, and then you just take a trade here, right? Here, without looking for any further lower time frame setups to confirm what you have on the lower higher time, right? So between the 5 minutes and the 15 minutes, this is the 15 minutes is definitely your higher time frame. Unless, of course, you have decided to pull the fib from this high to this low and then taking the trade where when price gets to that 61.8 and then of course have your stop above here. That way you are safe. You are only stopped when price comes all the way here. But I decide for myself that once price is where I want it to be on the lowest time frame, I would look for an extra confirmation and take the trade. That is for me personally. So you decide what works best for you. All right, so let's just go back to what we're saying. So price hands in here, not giving me any indication of it wanting to go lower. Now, the dollar index hits consolidating, gives me an indication here, right? Closes above this, and then comes back in. Another confirmation, closing above this, right? Expanding above this high, closing above it, telling me that price actually is rejecting this whole area and it's now creating bullish order blocks wanting to go higher, right? So that is your confirmation of the SMT divergence, right? You see that this is failing whilst the GBP USD is going all the way to take out this high. Now on the GBP USD, how do you trust it? Even though you are seeing that it's taking the previous day's high, whilst the two counterparts are failing to do the same. This is failing here, and this is in its casual pullback. And then GBP USD decides that it is expanding to go take out highs. Of course, some people would have shorted here, and definitely you have your stop there. Now it comes all the way to hunt them, and then begins to. Now, if you see where I have the trades, this is another rule that I personally use. I was actually trading this high. As soon as price hits it, I go in short. I go 30 pips above it and then wait. Right? That's why you have me put this trade here. But I'm going to break down for you to see where exactly you would have taken a trade after this SMT, after this one taking out this high. Okay. So for me, my trade actually came once price hits this. I knew that we had an SMT because I was expecting something like that because of how the GBP USD was expanding and failed to actually give me price action here. How it was expanding, I knew that we would definitely see an SMT divergence. So these two trades were taken as soon as price swept this, right? I wasn't expecting price to go any further higher. That would have changed the whole narrative because then it would be a breaking market structure to the upside and then pullback would have been a continuation, right? What we were witnessing from the previous day was this is an expanding move. So to see a pullback. This is an expanded move higher, so see a pullback. So certainly we would expect the same thing here, but this is going all the way to take our stops. So that's where the red light goes on. Then we expect. So from here, I'm answering the question again. How do you trust an SMT divergence so you can trade it? Now this one hits. You wait for a breaking market structure to the opposite side, which is the downside. Then you trade the OTE or 61.8, whichever one that you prefer, right? But this particular trade, I'm saying that I took it straight because I was expecting price to hit. So I'm actually trading turtle soup here. Exactly, that's the perfect name for this trade. In my mind, I was trading the turtles. Price hits it, and I go in, and I go 30 pips above it, right? And then I leave it. These are my targets. But as you can see, I closed the trades here. Why? Because of the consolidation. I think that it led us into the close of the day, so I didn't really get to my targets. These are my targets, right? So I'm taking the trades here. I'm going 30 pips up, and then I'm expecting price to hit this, give me 98 pips, hit this 119, 146, and then ultimately 170-ish, right? So it makes sense if I go 30 pips, right? And then expect price to go give me 170 pips profit, right? So price gives me an indication that we have an SMT divergence. Now, where do I take the trade? So once the first time price hit, we didn't get any breaking structure. I keep stressing breaking structure because that is your confirmation, your first confirmation as a trader. That is the first and perhaps your only confirmation as a trader, unless people have other means of looking for their confirmation. But your principle that leads you closer to having the odds in your side is a break in market structure, right? So you hit it here, you have a consolidation. There's no break in market structure until this point. Until this point. I think that's here. Yeah. This one gets breaks here. Right. So let me put black line. So this is where you have your confirmation. Now, where is your new trading range? The new trading range is this high, closing below this low. Now, when price comes in, what else do you have? You have a gap here. That is where you go short. You go short, the stop comes here. Now, you wait. You have seen that this would have been a frustration. That's why I personally closed my trade, because at some point, if you are seeing this, after taking partials, I pulled the stops to cover my trades and then decided to leave it. But later on, price came back to hit me out. I didn't care because I had already taken some partial. So I held the trade from here, it came down, came back in. All this while, my stop was above here, like 30 pips from down. Came down, came back, came down, came back to take out this high. I was still in there. We had this drop, and then there was a news. This here was a news. I still held on, and then so came back here again. Finally, decided to give in because you don't want to be in a trade and then getting frustrated with consolidation. Ladies and gentlemen, please forgive me. This video has been extended and it's taking much time, but I just want to take my time. This is the first video in a while. I want to break down everything for you guys. So you take your time to watch it. So now this one gives me a breaking structure, okay, a confirmation that now the SMT divergence is confirmed, right? So once price comes back in, let me use a triangle. Price comes back in, it's done. That's where we have the trade. The stop loss goes here. Of course, your target, these lows, all the way to the side. And on Thursday would have been a perfect day. I definitely knew that after this consolidation, Thursday was going to expand, but the whole of Thursday, I didn't look at the charts. I didn't look at the charts because I had some busy errands I was running, and later came to see that we actually had my ultimate target was hit. But this was a winning trade for me, so it's okay. All right, so that's it. If you have a confirmation, you can go back to your chart and look for days where you had SMT divergence. You would see that those that failed did not have a clear breaking market structure, but those that worked, all of them do have a breaking market structure, as I have explained in this video. If you did not catch it, please go back to the video and watch it again. Now, this is the final trade I took. So in that week, I took the first trading week of January. I took 2 trades. This one winner, this one loser. Right? Why did I take this one, even though it was NFP? And here's my thought process. Price closing below these days. For me, that's the H1. Right? Clear breaking market structure. So this is the high, this is the low. And when NFP comes, I'm expecting, of course, a violent pullback and continuation. I had the targets down. I can see to go well. Right, so this is basically my thought process. Right, price closes below this, has a breaking structure, and then consolidates, closes below this, we have another breaking structure. Of course, I know I should trade it, but this is my thought process, why I decided to go on. Now, I left a limit to sell, but we'll get down in 5 minutes for you to see. I still could have taken profit, but the position that I put on that day was so insignificant, was so small that yes, as you can see, this is the high I could have used this high. This is the high I was actually using as the trading range. This high to the low before we have this one. This is NFP. So NFP comes in, hits me, it gives me some profit, right? Puts me in profit. I actually opened the trade to see. And then when I saw it was around 36 or 40 pips, yes. But I had a conviction that we're going to go lower, and this would be like a trigger for my trade. So I decided to leave it. I still didn't put the stop loss break even. But because, like I said, the position I put in was so insignificant, so insignificant to my account. Right? So I decided to let it run. And later I came back to see that it was actually whipsaw breaking structure, I think, over here. And this is actually back to this level continuation. But I actually didn't care, honestly speaking, because I was only playing the devil's advocate. So, ladies and gentlemen, I will end the trade here, the trade explanation here. That's basically it for the first week of trading for January. And the trades I took, I decided to do this video with a couple of my friends to explain. But like I said, I had a terrible outage here and the video cut along the line. So I decided to do this. I actually promised them that I was going to do this for them to get my thought process. If nothing comes in, I plan on doing a video review for the week. I'll do a forecast for the week, and then every weekend on Saturday, I'll do a review for the week. So if nothing happens, and I pray that nothing happens, nothing comes to pass. And I'm not making any promises, please, but it will be very good for me to be able to do that personally, right? To be able to have a forecast, and then at the end of the week, have a review of how the forecast actually is. So that'll be it for me, but let me just draw your attention to this. So on the Friday, on the Thursday, where the trade actually happened, yeah, taking this short-term high, price is breaking structure here, but I don't like this one. I like this one. I explained to my people why I like this one, try this one when we're on the call. So this, we have this pullback, we have this consolidation all the way to this side, and then we have this, we have another one here. So there were clear opportunities for anybody looking to trade or anybody who traded to have made something. Right? So, so that was it. Right. I hope this video has been explained well and clear enough. If you have any questions, you can comment them on YouTube, and then I'll try to answer them. If I have to do a video explaining the questions, I will do that. But I hope that this is clear enough to have actually explained SMT divergence to you and how you can trade it. I don't know if people, I'm sure people have already done this, the other videos, but this is me, how I do it, okay, to the best of my understanding. And I'm actually sharing the field. I don't have anything to hide. This is how I do it. If it fails, it fails. I put it down and come back to review how it failed. But this is how I do it, right? So I hope this one helps somebody out there. Give me a thumbs up, comment on the video what you think, share with your friends, and perhaps if I get a positive feedback, I might come back to do any more videos. Of course, I will do these videos again for myself and not for anybody, because I'm keeping them as journal after everything I write. I have videos that, okay, I think I should just, but I have videos of last year. I was doing videos for myself every day. I store them on my computer. Every evening, I would do a video explaining the trade I took and whatever my thought process was, but I never posted it. So that's it, right? But I'm hoping that this year, whatever video I do, I'll post it, because I've already exposed myself on YouTube already, since I'm going to post it. So thank you guys for listening to my boring lecture. I hope this video helps once again. Thank you, and I will stop here. Bye.